Hello friends, how are you? Hope you are doing well. So today we will start the discussion related to the different corporate business functions, their associated enterprise risks and associated ESG impacts. So we'll go one by one different corporate business functions. We'll identify what are the risks associated in the business functions, which we generally consider in the enterprise risk management or as per the ISO 31000 practices also. Similarly, we will identify in this exercise what are the enterprise risks and what are the associated ESG impacts, environmental, social, governance impacts. So we'll learn about that, and we will start with the finance department first of all. Okay. So we will see in the finance department what are the different risks associated in this business function, what are the enterprise risks which we are considering in ISO 31000 as I said earlier. So let's take example of the different risks one by one. Like we talk about the financial misreporting. Actually, misreporting means basically inaccurate reporting which can happen due to the errors or manipulation affects investors confidence and could lead to the regulatory penalties also. So what is the risk associated? We said financial misreporting. So what will be the associated ESG impact? So we'll talk majorly about the governance pillar. Okay, this misreporting can lead to poor financial governance which is affecting the transparency, potentially eroding the stakeholders trust and also reducing the investors confidence as well, and it will be impacting the company's market value and reputation also. Then we discuss about the second risk in the financial side. We can say budget overruns. So this means exceeding the budget strains resources and it will reduce the profitability also. It will be also related to the governance pillar of ESG. So what will be the associated impacts related to this? So we can say inefficiencies in the budget management can lead to resource wastage and also can damage investors relations. Okay. Also this can happen due to the diminished return on investments. Then next is credit risk. This is happening due to delayed payments from clients which can strain the cash flow and increase the credit exposure. So this is again related to the governance. In the credit risk, what can be the associated ESG impacts? Like poor cash flow management which can create financial instability and also raising the risk of default and damaging credit worthiness and stakeholders relations. So it is impacting the credit worthiness of also. Then next is about currency volatility. Okay, this happens because of exchange rate fluctuations and can impact profit margins and financial stability. Also again related with the governance. So we can say economic instability due to the currency which risk is affecting financial planning, reducing resilience and potentially compromising long-term business sustainability also. The next risk comes fraud risk. This can happen because of the fraudulent activities which can lead to financial losses and regulatory penalties, and this is again a governance issue. Okay, so what will be the impact related to this? We can say unethical practices damaging the corporate integrity, also affecting the investors' confidence and the company's standing in the marketplace. Okay, then market risk. We consider one more risk in this finance department, market risk. This is This is happening because of the economic shifts and also affecting the revenues and operational sustainability of the organization. This is related to the governance again, and this can reduce the profitability from market changes, can harm the company's viability and also the well-being of employees and communities reliant on the company's success. Actually, the next risk comes cash flow management issues because of the poor liquidity controls, and it will impact the ability to cover the liabilities. So insufficient liquidity increases the risk of we can say operational disruptions, impacting employee job security and also possibly the supplier relationships. Okay, supplier relationships. Then we talk about the next risk, which is related to interest rate fluctuations. This can affect the loan repayments and cost of the capital capex, and this is something which is related to the governance. So we can say higher interest rates can limit investments in sustainable initiatives, also affecting long-term economic growth and the business resilience. The next risk comes, which is related to the taxation, tax compliance risk. Okay, non-compliance to the taxation system leads to legal issues and also the financial penalties, and because of the poor tax governance, this will result in regulatory fines, affecting community investments and also impacting the company's social licensing to operate. It can impact the social licensing as well. The next risk comes related to the investment related risk. Poor investment choices that can lead to asset devaluations and the losses. Also, it is related to the governance system. Unwise investments can deplete the resources needed for the social or environmental commitments and also affecting broader sustainability goals, okay, or sustainable development goals. So friends, we have discussed what can be the possible enterprise risk related to the finance department or finance business function, and what can be the associated ESG related impacts for different risks what we have identified for this particular department. We will consider the next department and its associated risk and ESG impacts. Till then, thank you very much.